Bitcoin is about to explode. What happens next? Bitcoin is flashing signals we've only seen a handful of times in its entire history, and every single time, something massive followed. A huge price explosion, a complete market reset, or a level of volatility that turns millionaires into billionaires and wipes out anyone who wasn't paying attention. Today, we're going to break down exactly what's happening with Bitcoin right now, why analysts across the world are calling for a massive move, and what could realistically happen next. No hype, no fear-mongering, just the facts simplified, so you walk away knowing more than 99% of the market. So grab a drink, get comfortable, and let's dive into the truth about what's coming next for Bitcoin. Bitcoin is weird. It can be insanely boring right before it becomes violently exciting. And right now, we're in that weird, quiet stage, the stage that never lasts very long. Bitcoin's price action over the past few weeks shows something very important. Volatility is collapsing. The candles are getting smaller, volume is drying up, and price is tightening into a narrow range. This kind of price behavior has a name, a compression phase. And historically, when Bitcoin enters one of these phases, it's like pulling back a slingshot. The tighter it gets, the bigger the move. We've seen this exact behavior before. In 2017, right before Bitcoin shot from $3,000 to $20,000. In 2020, before breaking out of the $10,000 range and running to $69,000. And in 2023, during the ETF rumors that sparked Bitcoin's next bull run. Every single time Bitcoin has consolidated this tightly, a major move has followed. And the biggest question now is, which direction will it go? To figure that out, we need to understand the forces building up behind the scenes. Section 2. The key factors building pressure on Bitcoin. There are 4 powerful factors converging at the same time, something extremely rare in Bitcoin's history. Let's take them one by one. Supply on exchanges is shrinking fast. One of the most underrated but important metrics in crypto is the amount of Bitcoin sitting on exchanges. Think about it. If people want to sell, they keep their Bitcoin on exchanges. If they want to hold long-term, they move it off exchanges into cold storage. Right now, on-chain data shows that Bitcoin supply on exchanges is at multi-year lows. Lows we haven't seen since before previous major rallies. This means 3 things. People aren't selling. There's less Bitcoin available to buy. Any surge in demand could trigger a massive supply squeeze. This alone would be bullish. But it's not happening alone. 2. Institutions are quietly accumulating again. Ever since spot Bitcoin ETFs launched, something changed forever. Bitcoin became an institutional asset. And while the hype cooled down after the initial surge, inflows have recently begun rising again, and this is huge. When big funds allocate capital to Bitcoin, they don't buy because of memes or FOMO. They buy because their models tell them the price is undervalued compared to future expectations. Here's what's even more interesting. Pension funds are beginning to add small BTC allocations. Insurance companies are exploring Bitcoin exposure. Hedge funds are increasing long positions quietly. Corporate treasuries are accumulating again. Institutions don't chase pumps. They accumulate during periods of low volatility, exactly like right now. And when institutions accumulate, the price almost always follows. 3. Miners aren't selling, they're hoarding. After the latest Bitcoin halving, miners saw their block rewards get cut in half. Usually, this forces miners to sell more Bitcoin to cover their costs. But something strange is happening. Miners are not selling. In fact, many are holding more Bitcoin than before. Why? Because miners are some of the closest people to Bitcoin's economics. They feel the pulse of the network better than almost anyone. If miners, the people who earn Bitcoin every day, are holding their coins instead of selling them, that is a massive vote of confidence. Combined with low exchange supply and institutional accumulation, this creates the perfect setup for a supply shock, a situation where demand rises sharply while supply is locked away. And supply shocks historically lead to explosive price movements. 4. Macro conditions are trending in Bitcoin's favor. Bitcoin doesn't exist in a bubble. It responds to global economic conditions. Right now, we're seeing rising concerns about inflation, Countries facing currency devaluation, governments printing more money, banks showing structural weakness, increasing global geopolitical tension. All of this strengthens Bitcoin's main narrative, a decentralized, hard-capped asset that can't be inflated or controlled. In times of uncertainty, people turn toward assets with predictable rules. And Bitcoin's rules are crystal clear. This is why adoption is rising globally, not just as an investment, but as a hedge. Even if you ignore fundamentals, even if you ignore macro conditions, the charts alone are screaming that something big is coming. Let's break down the clearest technical signals. 1. Bollinger Bands are the tightest they've been in months. Bollinger Bands measure volatility. When they squeeze tight, price is preparing for expansion. Right now, they're tighter than almost any time this year. Historically, this has been the precursor to major moves. 2. The weekly MACD is close to a bullish cross. A MAC cross on higher time frames, especially the weekly, is significant. In the past, this signal has preceded the 2020 run, the 2021 all-time high, the 2023 recovery rally. If the weekly MACD crosses upward again, it could open the door for another major bull leg. 3. RSI reset looks perfect for a breakout. RSI, Relative Strength Index, shows whether an asset is overbought or oversold. During Bitcoin consolidations, RSI usually resets to neutral, giving price enough room to climb without becoming overbought. We're seeing exactly that right now. Bitcoin is in a perfect position for upward momentum. For whale wall activity is increasing. Large Bitcoin holders, whales, often know what's coming before the public does. Recently, whales holding 1,000 BTC or more have been actively accumulating. Whales aren't always right, but historically, major whale accumulation has preceded big market moves. What's happening now looks incredibly similar to previous pre-breakout periods. Section 4. So what happens next? 3 realistic scenarios. With all these signals lining up, what comes next? Let's break down the 3 most realistic scenarios, starting with the most likely one. Scenario A, the explosive breakout, most likely. If Bitcoin breaks through current resistance with strong volume, the move could be extremely fast. Here's what typically happens during breakout phases. 1. Price jumps sharply to the next psychological level. Bitcoin tends to move in chunks. $5,000, $10,000, or even $15,000 a time during high volatility. 2. Retail FOMO kicks in. As the price climbs, media headlines return. More people buy just in case. This fuels even more upside. 3. Altcoins start running shortly after. Bitcoin always leads. Once Bitcoin stabilizes after a breakout, altcoins explode, sometimes even harder. 4. A new narrative emerges. Every bull cycle has its narrative. 2017, ICOs. 2021, NFTs plus DeFi. Next cycle, likely AI plus crypto, BTC ETFs, and tokenized real-world assets. A breakout could set off a chain reaction that defines the next year of crypto markets. Scenario B, the fake-out, possible but not catastrophic. Sometimes Bitcoin briefly breaks out, only to fall back again. Why does this happen? Because whales use fake breakouts to shake out leverage and trap traders. But here's the important part. Fake-outs usually lead to even bigger real breakouts. A fake-out clears the market. Over-leveraged traders get liquidated. Weak hands panic sell. Big players buy the dip. After the reset, Bitcoin often rallies harder and cleaner. Scenario C, the unexpected crash, less likely but possible. Cryptocurrency always carries risk. A sudden crash could be caused by harsh government regulation, a major exchange collapse, global economic crisis, a massive liquidation event. But even if this happens, history shows something important. Bitcoin always recovers. Every crash in Bitcoin's history has eventually become a buying opportunity. The Bitcoin chart over the years looks like a staircase. Sharp drops followed by even sharper recoveries. Long term, Bitcoin has always moved higher. Regardless of the short-term direction, smart investors have already chosen their strategy. Here are the three things almost all long-term Bitcoin holders are doing. 1. Accumulating during consolidation. When price is boring, smart investors accumulate. They buy slowly and consistently, without worrying about small price movements. This strategy is called dollar-cost averaging DCA. It's simple, beginner-friendly, and historically one of the most effective ways to invest in Bitcoin. The goal isn't to time the bottom. The goal is to accumulate while volatility is low. 2. Watching key levels carefully. Smart investors focus on long-term key levels, not tiny fluctuations. The levels to watch right now are major resistance above current price, the 200-day moving average, weekly support zones, ETF inflow data, exchange supply metrics. Because when Bitcoin breaks out, it usually moves fast, too fast to chase. 3. Preparing for both outcomes. The worst strategy in crypto is having no strategy. Smart investors prepare for a strong breakout, a temporary fake out, a sudden dip. They plan their entries, exits, and risk management before the move happens. They don't wait until chaos begins. This next Bitcoin move isn't just another price swing. It's going to define the next phase of crypto's evolution. Here's why it matters so much. 1. Global adoption is accelerating. More countries, corporations, and institutions are adopting Bitcoin than ever before. 2. Bitcoin ETFs changed everything. ETFs have opened the door to a new wave of investors who previously couldn't buy Bitcoin. If institutional inflows ramp up again, price could break levels we've never seen before. 3. Bitcoin supply is the tightest it has ever been, each having reduced the supply. But demand keeps increasing. Eventually, those lines cross. And when they do, Bitcoin enters a phase of exponential growth. 4. Retail hasn't returned yet. Average people aren't buying crypto right now. They aren't talking about it. They aren't even paying attention. But they always come back. And when they do, it's usually after Bitcoin explodes. That's why the people who position themselves early reap the biggest rewards. Conclusion: the explosion is coming. The only question is when. Let's simplify everything. Bitcoin is sitting in a tight consolidation zone. Volatility is at record lows. On-chain data shows supply is drying up. Institutions are accumulating quietly. Miners are hoarding. Technical indicators are aligning. Global macro conditions favor Bitcoin. Whales are positioning early. Every signal suggests that a massive move is coming. Will Bitcoin explode upward? Will it fake out first? Will it dip before it rips? No one can say with 100% certainty. But here's what we can say with confidence. Volatility is coming. Momentum is building. And the next big Bitcoin move will shape the entire crypto market. Whether it's the start of a new bull run or one last dip before the climb, one thing is clear. This is not the time to look away. Bitcoin's next chapter is about to be written, and it could happen in a single candle. Stay informed, stay prepared, and most importantly, stay calm. Because the explosion is coming. The only question is what happens next.